All right, everyone. It's going to take a couple minutes for everybody that was previously in the meeting to get loaded and signed on. So we'll give everyone a minute. Happy St. Patrick's Day. This would be where my panelists also say, hey, happy St. Patrick's Day. Happy
Hey,
St.
happy St. Patrick's
Hey!
Day.
I forgot to incorporate that into your talk track.
I hope
Um,
you all are eating some corned beef and cabbage tonight and having a cold Guinness. How about
Yeah. So, in honor of St. Patrick's Day, and while everyone is getting loaded, I'm going to get loaded myself. Did you hear that snap? And I don't have a Guinness glass, but I do have my IPA glass that I very much enjoy. I should have told you this was going to be a part so you all could have grabbed your own Guinness.
I know, I'm a little jealous.
It's NA if that makes you feel better.
Yeah, no, non-alcoholics, all good.
It's like the NA movement St. Patrick's Day. So all right. We have we have more note takers joining than humans. They are loading up, but we are just about to get started for those of you that are getting logged in. All right. So, welcome back to the SIP, everyone, where conversation sparks connection, collaboration inspires innovation, and industry leaders tackle today's biggest challenges. Think of it as catching up over coffee or your favorite adult beverage, only with insights that move the industry forward. At TMC, we are passionate about empowering our members to thrive, and today's show features real world strategies and perspectives that only come from working together. Today, we're diving into a topic that does not always get the spotlight that it deserves, but absolutely should: reverse mortgages. And I say that because the conversations around this product have shifted in a meaningful way lately, and the demographics are undeniable, and the economics are compelling. And lenders who are leaning in right now are positioning themselves ahead of the curve of others in the industry. Today's episode is proudly sponsored by Longbridge Financial, and joining me in this is their National Key Account Manager, Robert Gonsalves. Robert, welcome.
Hi, Jody. Thank you. Excited to be here.
Absolutely. And also here from NAF are Angel Duke, EVP of Product Development. Yes, that is a recent promotion. And joining Angel is Shannon Robinson, Senior Vice President of the Reverse Division. Angel, Shannon, great to have both of you here, and happy St. Patrick's Day.
Happy St. Patrick's Day. It's great to be here.
Happy
All
St.
right, we're
Patrick's
going to get a
Day,
little
Jody.
bit.
Thank you so much for having us.
For sure. We'll get a little bit serious because this thing is hot. So it can sit there right on get my get shit done mug. So we have Longbridge powering the infrastructure today, and NAF as the lender making a real strategic commitment and reserve. So we'll go ahead and get started. Angel, we're going to start with you and the big picture. NAF made a deliberate decision to expand and deepen its commitment to the reverse mortgage product. Walk us through that and what was behind the decision, and what does that investment actually look like?
Oh, that's a huge question, and we don't have the time to go through all of those answers. But there's a lot around that. At New American Funding, Patty Arvello and Rick Arviello have a vision for the company, and that is to make sure that we have as many products as possible to be able to offer to borrowers to meet the need that they have. And needs are so different across the board for borrowers. And the reverse product is a specialized product for specialized needs. And it's one of those ones that, as you said earlier, doesn't get talked about nearly as enough. And so that was a deliberate move for the company. It was a deliberate focus for the company to make sure that we had that for not only the borrowers, but as well as for our loan officers. It's something that is distinctive. It is something that is a differential for us, and it's something that's a retention piece for us as well. So not only are we meeting the needs for our borrowers, but we're also meeting the needs for our sales team as well, and making that commitment going forward and making sure that we had had the support team specialized in Shannon's team that you'll hear about, was a definitive focus for us and a game changer for us in the space.
That is amazing. And Robert, from where you sit at Longbridge, working with lenders across the country, what are you seeing in terms of appetite for the product right now? And is NAF's story unique, or are more lenders starting to wake up to this opportunity?
Yeah, no, I mean, I think it's been a perfect storm of borrower need, market conditions, and really product innovation in our little corner of the industry. We have a long way to go. There's definitely been growth in the market because what we are finding is more people than ever need a senior home equity solution. You think about some of the statistics that we talk about. The reality is the largest age segment of home equity are those that are 62 and older, and they hold more than 14 trillion in home equity. So it's a huge component to the home equity puzzle when you think about leveraging home equity for someone's retirement solution. And then you look at the retirement statistics and just the evidence that we have. Things like fact is people are living longer these days. When polled, they don't know how much they're going to need to retire. People are saving less in general for retirement, or just simply unprepared. So that kind of covers the need side of things. And then you look at what people want to do in retirement. They've spent a lifetime in their careers working, and they're kind of at a point in their life when they either want to age in place, maybe move closer to children, right size their home, or just enjoy retirement. So there's a lot of different scenarios, some needs based, others not, where senior home equity, it becomes very clear is the right answer. So because you have this growing diversity of how seniors want to leverage the home equity and the increased demand, for us, it's really meant being very intentional, right, about how we look at product design and giving partners the really best choices and options. So, again, I mentioned we have a long way to go, but when you have about to be 10, the top 10 of 10 IMBs in the country actively engaged in the space and looking to invest more in this space over a sustained period of time, I think it's clear we're gaining momentum. And we found that doing things intentionally and with the right partners is the real recipe for success.
Yeah, and we've talked with you all about customers for life and how that used to mean customers for life until you're at the age of retirement, and then then it is kind of lost. So with that aging population, I think it's important that we all make sure that we're dialed into what options are for seniors, and appreciate your education to our lender members and preferred partners as we look at the demographic. Shannon, you have been in this product for a long time. What does the momentum feel like compared to where reverse mortgage space has been in previous years?
Jody, it feels really good. Just the fact that we are having this conversation today just is exciting in itself, because you wouldn't have seen this, several years ago. The fact that we are welcoming the word reverse mortgage into so many conversations is showing and displaying how this product is evolving. I'm excited. I've been in this, I think now a little over 20 years in this space, just focused on reverse. And, in the beginning, as you mentioned, it was more needs-based, right? It was a more needs-based client. You hear of this loan being the last resort loan that it was often labeled. And now we are really with, the peers here on the call are moving to more of a sophisticated client. We are extending a conversation with affluent borrowers. We're proactively out helping with this product to plan for their retirement and their future. So it's a sensitive conversation, not one that we don't take lightly, not one that is a last resort. It's like, how can you look at a reverse mortgage as this tool? Housing wealth is becoming a broader retirement strategy and is opening up new conversations. We're now bringing, families together. Financial advisors are opening their doors. They're listening. So many conversations now that you're hearing around the table with the financial advisors. And so it's exciting. The opportunity in front of us, as we've seen, it's transformational.
Yeah, and I do think like loan officers, we went from having a very bad reputation post subprime crash, and then through the time of the movement into the TRID era, we have seen a regrowth of loan officers being seen as trusted advisors, not just to the home buyer, but to other connections like financial advisors that you were talking about. So I do think that times are moving forward. Shannon, we're going to stay with you. One of the things that came through so clearly when we were talking is how emotionally meaningful this product is. And it's not a transaction of the traditional sense. Can you share with the audience the emotions that are behind reverse mortgages?
I can't. I won't go as long as when we first chit-chatted because it is definitely near and dear to my heart and so many. It's not a transaction. I know at the end, yes, it is. We're doing that, but it really is a relationship that we have formed. We're working a lot with our partners in New American Funding, where we have now expanded our product set to lean over and be able to work with us, partner with us, where some of these clients have been with our loan officers, as their very first, home purchase, and went
Mhm.
on to maybe move up and go into their next home, refi, buy other homes. They've built relationships over the years, and that is the same way that we treat also the reverse mortgage transaction. Typically, this transaction is kind of the final transaction, if you will. There may be an opportunity to refinance, but we really make sure when we sit down, like I said earlier, it's a retirement strategy. So it's a longer conversation. This just isn't something typically it's one and done in one day, like maybe some products that are out there, and that's terrific. But this one takes a little bit more of a longer conversation. Like I mentioned, children are usually involved because we're going to have that, conversation as what happens when it's time to move on, what's going to happen with the life of that loan, what's going to be left to the heirs. So we often, encourage our loan officers to bring their children or, that, person that's going to be taking on, whether it be a trust or something of that nature, to the conversation. You'll see, like I mentioned, financial advisors. You'll see pastors come to the table as well. People will, be leaning into their church and other, organizations that maybe they're affiliated with and want to just have that broader conversation so that people like to listen to hear, what people's experiences are in reference. And so it's typically one that deserves, a lot of trust to make sure they're sitting down with a trusted loan officer that has their best interests. Not sometimes a reverse mortgage isn't the right answer. And so we want to make sure that we do our due diligence and sit down, offer all the products that we have available, and then also show them obviously why a reverse would make sense for them. So we want to ensure the client that they're working with the experts throughout the process, and it really is a relationship. The relationship is the key in this, Jody.
Yeah, and that relationship dynamic makes the loan officer's confidence and preparation absolutely critical, which we know when there are so many different products out there can sometimes be challenging, which leads right into how NAF has structured this. Angel, you want to jump in and talk about the centralized model and what it actually means for loan officers on the ground?
Yeah, I mean, you hit the nail on the head. As the product manager at New American Funding, we have so many products, and the industry has so many products. When you look across all of the different pieces that there are available to us, with all the expansions that there are in the industry. But when you talk about reverse mortgages, you just heard from Shannon and from Robert as well. I mean, we are talking about this group of borrowers that are emerging because of age and demographic and all these different things. And it is a specialized product. And it has made a huge change at New American Funding to be able to have it centralized. Because as Shannon just mentioned, we want to make sure we're doing the right thing for the borrower. We want to make sure that they're getting the right analysis of what their needs are. They want to make sure we're putting them in the right product. And not saying our loan officers can't do that, but is that their focus all the time? Maybe not. This is that centralized team's focus. That's all they do day in, day out. They are the gurus at it. And therefore, that is that trusted advisor. And for our loan officers on the ground, there's a comfort with that. There's a
Yeah.
comfort to say, I can not only just offer the product, I have a group that is specialized in it that will take care of that customer. As Shannon said, maybe that customer I've had for their entire transactional life in mortgage, and they're
Yep.
going to be taken care of. They're going to get the top, consultation, the top products, the exact need met, or told why this doesn't meet their need and why,
Yep.
and given other options, and maybe come back to me. And that's a game changer. It's a game changer for exactly why we're all in this business. We're supposed to be that trusted advisor. We're supposed to be the one that takes care of that borrower. And because we've centralized that, it makes a difference for not only the customer, it makes a difference for the loan officers as well.
And I don't think that loan officers should see that as a knock to their
No,
expertise because not only are there a ton of products, they change. I think
exactly.
how many changes did Fannie Mae come out with last week on income that we've gotten used to the set of guidelines and now things are changing. I'm not saying for the good, for the worse. It's just that they're changing and being able to stay up even on the standard products is very complex, let alone something that isn't in your everyday sales cycle. And
Exactly.
Robert, from your vantage point at Longbridge, when lenders centralize reverse functions and partner with you to power it, what kind of outcomes are you seeing?
I mean, simply put, more success, right? We've run the data over the years, but the reality is when you look at the publicly available data and our own internal data, it's so clear that the companies that centralize their reverse mortgage originations, they control over half of the originations in the space. Turns out being intentional is more rewarding. It's not difficult to understand why. Borrowers, they have a better experience working with subject matter experts. They're in a trusted advisor role, as Shannon and Angel have mentioned. It improves the commitment level for the team, which leads to more opportunities to serve borrowers. It improves efficiency through the loan fulfillment process, which, as we've talked about, can be a little more active, requires some more active engagement on our side of the fence. Um, but that's something certainly the borrower appreciates. And it just leads to more productive workforce overall, right? Both for the company that's centralizing and for us as a partner. And word of mouth, it's very powerful. So centralizing, having some intentionality behind your approach to the product, to this market, to the borrowers, it obviously improves your company's reputation due to the expertise of the product and the knowledge base of a dedicated team. And honestly, New American Funding is one of the greatest success stories of approaching this business with great care and intentionality, and it really shows you how to kind of do things right. A great example of that.
And, just to highlight some things that Angel said in the beginning, it's not just a product decision. It's a retention play, it's a differentiator play. Loan officers who feel supported in complex product categories have a reason to stay, and they also have a reason to join if they're not getting that support elsewhere. And the borrowers are better served because of it. So kudos to Longbridge and New American Funding for your partnership in bringing that centralized model to the customers. Angel, let's talk about what is new and what is coming. The proprietary side of reverse market has been growing. Walk us through what NAF is seeing and offering on that front.
So I would tell you, if you don't know that there's a proprietary reverse mortgage side, you need to learn that there's a proprietary product side. So most people don't even know that that exists. I honestly didn't know it existed for a while. I had to go and do my own research for a while. But there is. So most people all would automatically assume that there only is the government side of it. And that is all that everybody's ever known for the longest time. But there is a whole secondary side of it. There's a whole other side of it where there's a proprietary side of it where investors are going in and saying, hey, you know what? We know that there is the whole retirement planning piece of it. There are borrowers that are wanting to get into it a little earlier. Some states are allowing that, et cetera, et cetera. So there's age pieces that you can go in even earlier for that. And that is a huge option now in that space. And so we have completely partnered with Longbridge on that. We completely have partnered into that and offer those products to be able to do that. And that again, getting that borrower into that retirement setup earlier if they want to go earlier. Again, maybe they have not been able to save like they wanted to. Maybe they've had financial difficulties that have hit that. Maybe they want to do that financial planning earlier. Whatever reason they want to start it earlier than age 62, or for whatever other reason that they're looking at the proprietary product, now we're able to do that. So we're not only constrained at just the government product. So, guys, if you're thinking about it on your normal side, your forward mortgage side, think about it as you're not only constricted by your Fannie, Freddie, Govy, you now have all these other products. Think about it the same way. They now have those proprietary products as well on the reverse side, and that's just going to continue to grow, in my non-expert opinion, in that space. And at New American Funding, we're going to continue to offer those as that grows, and that's a game changer. That's a game changer in that space, and so many people don't even know it exists.
Yeah. I think it's like a crawl, walk, run. So the crawl part is if you're not doing reverse mortgages, get in contact with Longbridge and figure out how to start originating reverse. Then start originating, and then you progress to the run status of, oh wow, now there are proprietary products in the reverse space now that I've become a subject matter expert in the area. But I think the key point is start somewhere, start by originating reverse mortgages. Shannon, on the training side, this is an area you are clearly passionate about, which I can tell are passionate about many areas, but this definitely came out in the call. Loan officers who have not grown up originating reverse mortgages need to learn a new product, new guidelines, and in some cases, a new way of having conversations with borrowers. What does education efforts look like at New American Funding?
So strong. I mean, Angel said it, you said it as well with crawl, run, or crawl, walk, and run is just kind of the evolution of reverse, like I said, over the last 20 years. And it's so exciting to see proprietary really become, I think, a game changer in this space over the last couple of years. I mean, I think the statistics were coming out over the last couple of months that, what, 40 to 50% of our fundings are going to be proprietary. And the training that we've done, and I'll speak specifically with Robert and his team, I mean, I think they're coming out with something or maneuvering something with us. It feels like almost every month that we have a little bit of a tweak, and we're so grateful for that. They see the passion in which we want to keep people in their homes, be able to offer as many products. And so many people have grown up in this space just offering the traditional HECM. And now that we have seen so many other investors step into this and say, you know what, let's revisit this. We are now going down to age 55. It's not just 62 years and older anymore. It's now, let's see if we can start having these conversations earlier. And there's a plethora. And I mean, that's been the beauty. And so us, continuing to evolve. We have a lot, we have a centralized team, but we also have a decentralized loan officers within New American Funding that do both traditional lending and that also do offer reverse that may not know about the proprietary product. So it's our responsibility at NAF to make sure that we're, introducing Robert, introducing these products. We have, our person also internally that helps out with this as well to make sure that, we want to save as many loans as possible. We don't leave any loan uncovered. Bring that scenario to us because more than likely, Robert's got something up his sleeve that we can talk about. And we have a bat phone straight to Robert and the group. So it's constantly evolving. We're constantly training and educating, Jody. But it's really been this strong partnership that Robert mentioned with us and Longbridge.
So, Robert, I'm going to ask you a question, and your answer cannot be that you're going to go under the age of 55, or I will, it'll be like the day that my AARP card showed up. I was traumatized. I do not want to say that I'm old enough to be eligible for a reverse mortgage. But besides that, from Longbridge's perspective, what are your priorities for 2026, and what should lenders be paying attention to?
Yeah, no, it's a good question. I mean, simply helping our partners grow, right? We're successful when our partners are successful. So it's a goal, it's a mission, it's something we take very seriously. And yes, there's that word again, intentionally. Um, and I think at a very foundational level, we're investing in partners this year. And just to give you a preview of next year, breaking news, and the year after, we're investing in our partners there too. So what does that look like? I mean, it takes its form in a number of different ways. I think for us, knowing the passion that partners like New American Funding have, all the work that their team goes into serving borrowers and kind of getting to a point of helping someone with their home equity solution. We're relentless in looking ways to kind of streamline our fulfillment process, investing in people on our side to ensure we have the right people in the right roles, investing in training, internal training constantly, just to make sure that we're putting our best foot forward. I think it also looks like the development and investing in technology, right? There's been a number of third-party tools that we utilize on our day-to-day, but we are actively also developing technology, both some of it forward-facing, and there's been some of that that's been in place already. Things like Bridget, an AI tool that we offer to our partners to just help assist in tackling a lot of those day-to-day questions that come up, sift through guidelines more efficiently. Whether it's that or it's a comparison tool, right, to help originators empower them to be able to more sort of swiftly talk to borrowers about their opportunities in a more clear way, and it's internal tools as well, right? Developing ways that really I would summarize them as helping us to be the best air traffic controllers we can internally, right? Always knowing kind of where things are, status of things, right? All of the nitty-gritty stuff that we all have to deal with, and we're so thankful for operations teams for living in the trenches with, and we want to be there to support them. And it's a critical part to our success and therefore partner success. And on the product innovation side, I'd say it sounds cliche, but we're always listening. And when it comes to developing products and product design, that is something that is very near and dear to our heart, to our CEO, Chris Mayer, to all of senior management. And so whether it's really looking to understand from our partners kind of what the needs are from borrowers, what they're hearing, we also want to kind of assess what we see and maybe look to proactively address what we think might be best served for and utilized by borrowers. So Shannon mentioned this. We do on a regular basis do have tweaking to our products. At times it can be difficult to keep up with, but I think it's a good problem to have at the end of the day, because it means that we're actively engaged in the space and we just want to make things better.
That is amazing. This has been such a great conversation, and I'm genuinely excited of what it signals for our industry. The lenders who take the reverse mortgage product seriously, who build the infrastructure around it and train their teams and partner with the right people, are going to be very well positioned. Shannon, if a lender is listening to this today and thinking what to do right now, what is the first step that you would tell them to take?
I think I'm going to steal your word, Robert, is intention, right? I think intentionality is so important to this. It was definitely a conversation when I sat down with our president, Christy Bunce, 3 years ago, when we really wanted to scale reverse at New American Funding, is this just isn't another product. There really has to be an ecosystem wrapped around this product to support this if you're going to introduce it to your space. And
Yep.
I understand that, yes, we have loan officers. Absolutely. Make sure that they have went through the proper training and coaching, that they really do understand this product. There's so many outlets that we have. You have great partners like Longbridge that we have today that can really get you to have that educational awareness. But I'd also suggest that you look internally as well. What does marketing look like? Marketing is a very big component, and that was something that we had to evolve at New American Funding as we stood up Reverse the last few years. So looking at what your marketing efforts look like, you have to make sure anybody that is touching this documentation is well versed. They understand it from maybe a call center. Maybe some people are looking into leads. You want to make sure that that first point of contact that client is calling, that they understand. It's not just traditional lending. If this is what this client is looking for, make sure it just goes a little bit deeper. Our processing team, all experts in this space. We don't cross over. We really do leave it just as centralized, just like our loan officers. It is the same in our processing space. So we have, our processors are all 20, 25 years experience or more just in reverse. So operations, your support staff, because the loan officers are sometimes a little bit different in this space as well, meaning, so technology, conversations, it's just a little bit sometimes slower in the reverse space than maybe it is on the traditional lending side. So I just think that all aspects are very important. So the intention of setting this up just isn't just a one-time thing and done. Make sure that the wrapper around it really does have the best interest of the client and what the goals are of the company moving forward with this product in their space.
Yeah, it definitely is an investment. It's an investment worth making because the return on investment is great. Plus, you get to retain more of your clients, you get to retain more of your loan officers who keep producing, and it is going to become a must-have as a lender. Unfortunately, we're out of time. I want to thank you all so much, Robert, Angel, and Shannon. This has been everything I'd hoped that it would be. And a huge thank you to Longbridge Finance for sponsoring today's episode. They are doing important work in this space, and they have become tremendous partners of the Mortgage Collaborative and have been so helpful with our community. To everyone tuning in, thank you very much for joining the SIP. If today's conversation sparked something for you, share it with colleagues and point them my direction if they want to have a conversation about membership. We will be back next Tuesday at 2 p.m. Eastern for the TMC network and 4 p.m. Eastern for the broader network. So until next time, happy St. Patty's Day. Keep sipping. Have a great week.
Thanks so much.
Thank
Thanks so
you.
much.